I'm in contract with my first home. Would I have trouble getting into a second investment property? Would your advice be the same on yesterday's video? I don't think you're going to have any trouble getting into a second property depending on how you do it. So, there are different strategies for getting started in real estate investing. If you are a bankable individual, if you have a strong W-2, if you are able to qualify on your personal name, your personal income, then there's really no limits. Like a good friend of mine has a high W-2. He's a high W-2 income earner. Him and his wife are rapidly utilizing their 10 Fannie Freddie loans that they have available to them. And they are able to qualify for these loans based on their income alone. So you personally being able to qualify for a second rental property shortly thereafter buying your first likely won't be an issue. Now, the closer you get to that bank's allowable debt to income, the harder it's going to be. For the most part, I think it's my understanding, as soon as Will moves up here, he'll be able to rattle this stuff off since he is a lender on the residential side and now soon to be on the commercial side as well. He'll be able to answer these questions a lot more efficiently than I am. But for the most part, I believe that the traditional banks will consider real estate investments to kind of be like a new business venture. So if you are a self-employed person, you have to be in that industry being self-employed for about 2 years before you are bankable. Similarly, banks want to see that you have been the owner of rental properties for about 2 years before they count the rental income as income on your debt to income calculations. Sometimes people get a little bit trapped because the mortgage payment on their first property is now included in their debt to income calculations and the rent is not. So the rent isn't being counted to offset that debt to income. As far as building a real estate portfolio goes, then I think it is of most importance to get to 10 as quickly as possible. I don't think that I would be interested in having a portfolio of less than 10 properties. From my perspective, I don't know how you could make money. And I think if you have less than 10 properties, if you have 1, 2, 3, I think for the most part, you're always going to be losing money. Because if you write out, so if you take all of the components of one rental property, like windows, the roof, water heater, the electrical system, the driveway, the exterior, and you take the cost of replacing it and divide that by its estimated number of months of its life expectancy, then that's how much money you're going to have to set aside on a monthly basis so that when you need to replace that thing, you have enough money there to do it. If you take all of those items and calculate how much money you need to set aside on a monthly basis, you are never going to be able to charge enough rent to pay for all of those items as they're due, if that makes sense. So for every 50 years of a property's life, you've pretty much replaced everything in that property if you are sustaining it. It's very comparable to insurance companies and the way that insurance companies make money. So, there's not enough premium that an insurance company could charge one vehicle owner if they only wrote insurance on that one vehicle. Because let's say that car, total itself, its damage plus the other car involved is 70 grand, not to mention any of the liability factors. It's pretty impossible. And it would be very unaffordable for that one person to be able to afford to pay the premiums to that insurance company to cover all of the things that could potentially go wrong with that vehicle and all the liability exposure that it has. However, if that insurance company writes the insurance for thousands of vehicles, then now statistically speaking, not each and every one of those vehicles are going to be involved in an accident or have a liability suit attached to it in any 1 year, right? So the premiums collected from all of the vehicles insured are sufficient to sustain those insured vehicles and the liability exposure. Rental properties are truly no different. From one property, you can't collect enough money to insulate yourself from all of the things that could potentially go wrong. However, in quantity, you are able to sustain a portfolio because statistically speaking, not all of these properties are going to need something all at once. Right now, if all of our roofs need to be replaced at the exact same time and an insurable event was not the reason for it, if it's just normal wear and tear, it would bankrupt our whole operation, right? I'm guessing. Maybe not. Maybe we could work with a roofer or 2 or 5 and get a real quantity discount, right? But I use that example just to kind of prove a point of if everything happened at once, it would really hurt. Maybe I'm a little bit extreme. The more I'm thinking about it, the more creative ways I'm coming up that we can handle that appropriately. Wouldn't be pretty. There'd be a lot of tarps involved. Power in numbers is my whole point. Law of averages, law of large numbers. I really don't know which one is appropriate, but that's the idea. That's the idea that I'm trying to convey. Yesterday's video touched on the 2-year required limit to show income through investment property, so the advice is the same. Look at that, man. I'm consistent. Thanks for watching that clip. I thought that was a good question, and I think you can ask good questions too. Join us every Friday morning at 8 a.m. Eastern Standard Time for a live stream Q&A where we answer plenty of questions just like this one. In the meantime, consider subscribing to the channel if you want more of this content. And if you want to increase your deal flow, analyze properties better, and help me feed my family, click the link below for a free 7-day trial of PropStream.